Hello, traders. It's 8:04 a.m. Chicago time on Tuesday, the 5th of March, 2018. Starting a little bit late here. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're seeing a market that is shifted into a kind of a neutral stance. We're trading. The indices are trading really mixed. The Nasdaq is up 7 points. The S&P is up 2 points. The Dow is down 1 point, and the DAX is down 15 points. Looking at my quote page, it's really a mixed bag. The bonds are off 15 ticks this morning. The VIX is down just 2 cents, 0.16. The 10 years down 5.5 ticks, and 5.5 big ticks. And the Bund is down 14 ticks. The leader today is crude. Crude is up 35 cents or 0.62. Nasdaq's now up 9 points, and the Russell's up. So we really have a mix this morning, coming into a day where it's at least for the indices, it was definitely a big day yesterday. And we have gone completely sideways in the overnight session. We'll look at that in a minute in the S&P. So that's that. I'll take a look at that in a minute. As far as the calendar is concerned, this morning, let me refresh. This morning, what have we got? Market composite PMI came out for Europe stronger, for the Eurozone stronger. Same for the German services and composite PMI. In the US, we're looking for Kashkari to speak in about a half hour at the open. We also get market services PMI final for February. This generally isn't a very big number. Expecting 56.2. Composite PMI expecting 55.8. We get ISM non-manufacturing at a half hour after the open at 10 Eastern. And we also get non-manufacturing PMI, which could be a mover, expecting 57.3. New home sales as well, and monthly budget at 2 Eastern. And then, of course, after the close, we're looking for the API crude oil stock change. And then there's some Australian and Australian numbers, and a Japanese central bank speaker later in the evening. So the calendar is busy from about 15 minutes after the open. I mean, we do have Kashkari. Not sure if that's going to, whatever they say, is going to make a move. Cause a move, but really we're busy 15 minutes after the open, and then a half hour after the open, and after that it's the calendar's not having an impact. So excuse me. So let's take a look at what we expected yesterday in our review segment. Yesterday's expectations, way off. Given that we were breaking out of this balance zone that's outlined in the yellow box here, my expectation is for a break and continued breaking higher. Was looking for it to push towards 28.30. Remember, we have that 21.5 and 23.75 above as swing highs from November and October. But overall, I expected the market to have a hard time pushing through the 20s, and then to continue higher. Expected a gap zone to remain open because we are breaking out of balance. That was completely wrong. So scenario one, completely wrong. Scenario two, looked for a push higher initially, take out the overnight high, turn over, and then was looking for 28.04, 28.05 as a test area. And for that, I was expecting about 10 to 12 points of range. This was correct, but really did not expect it to actually go all the way through and take out last week's high as well as last week's low. Here's what the action looked like yesterday. So let me pull this back. So remember the overnight session high 28.1975. We open up at 15, take out the go to 18, and then sellers come in and take it right back into the range. Issued several warnings there in a convergent chat room that this should not be faded. Did not see much success by buyers lifting even at key areas down to 28.05. Initially 28.09 held for a bounce back to 28.15, and then when it came back to take out the IB, I was looking for 28.05, 28.04, then 2800, then 27.95, then 27.90, and then 27.87 as the key areas, in 27.80, and you can see it just blew right through. This is a 15-minute chart. The return was relatively strong for a trend down day. True trend down days tend to look like this, look like it's just a jigsaw, a saw kind of tooth profile, and then they tend to finish near lows with the point of control shifting down. The point of control remained near highs yesterday. That's an important indication. The value did not shift down, and then we usually finish in the lower quartile to give us a qualified trend day, so we can apply those trend day stats to it. And then what we ended up with is pushing back to the mid, and it was just squeezing at the mid before it ran out of time. Here's what's interesting: the overall delta. We can see early on they just watch the yellow line. The yellow line is a very large delta. As we can see early on, very large participants were hitting the bid. They come back, balance out a little bit in this noise. To me, this looked like a potential reversal area, and then it just gave up and rolled over. And then started to trend down. The very large lots kind of started to lead down. But look at the buying on the close. Very large lots bought this up pretty strong, coming back almost to, within 4,000, negative 4,000 on the delta, with a very strong buying spree into the close there. This is kind of an odd way to close a trend day. You can see price started to shift up, and the delta is also moving up. And this looked like it could, if it hadn't run out of time, it could have migrated even higher. Given more time, it could have recovered back into 2,800. The overnight session carried that forward, 27.99, and overall we finished right in the middle of basically in the middle of the balance zone. As I said, we took out the low of last week, which was 27.75. We took out the high of last week, which is 28.14. We have basically an outside day on the week in one day. Yesterday's range covered an entire week in just one session. And there was a fair amount of lifting, as I said, on the close. Another thing to note, we finished above the point of control. We moved back into Friday's range, which is also unusual for a continuation move. So that leaves us with some indecision, almost a neutral stance going into the overnight session, and it keeps us at a neutral stance coming into today's session. So if we extend this forward, let's bring this profile in here. If we extend this profile forward, see the point of control unshifted at 27.85 still, and we finished above, as I said yesterday. So let's take a look at the overnight view. The overnight view, what do we get? We get the open, of course, coming in just on top of the close. It's a normal session reopen. Nothing happened in a half hour between the close and the reopen, or the hour between the close and reopen. So it reopens at the same price it's expected. But what it does is it shifts, it tests down, then it tests up almost an equal, a symmetrical amount to the prior day's close. We had the point of control on top of the prior day's close, traded quite a bit at the 27.9150, and then what we have is the point of control, the mid and VWAP, and earlier the point of control right on top of each other, 27.9150, with a move to 27.99 and a move to 27.85, giving us symmetrical balance with symmetrical around the close, really consolidating. 181,000 contracts is pretty decent for the overnight session in this product. And overall, the market is coiling. Indecision. We are liking where we are given all the factors, the input factors coming in, given where the treasuries are and how everything is being valued. The market is basically saying that we're good at these prices. We can do business at these prices, and a lot of business has been done in a small range overnight. Okay, so just 14 points, but completely balanced. You can see that point of control shifting up and down depending on where we trade. So what does that do for us for today? So for today, well, let's take a quick look at what we've accomplished so far. So if we look at these candlesticks with a profile attached, we've been on a pretty good run from the drop in December. We've been on a pretty solid run. Clearly, buyers have been in control for quite some time. And yesterday, what it did, it took back all the action going back to the 22nd of February. So basically, these 6 days, is it 6 days or 5 days? No, 6 days. These 6 days that have been trading, all the effort that was made in those 6 days was taken back yesterday, and then we ended up back in the middle of the range, as I discussed. So the market has got two-way, both forces pushing and positioning. And so coming in today, we do have a bearish kind of candle, but we also have a big wick on the daily. You can see how it really came off that low pretty good and finished at the mid, as we saw on the prior chart. We're still above the large MC point of control, 27.3150. We're still above the 200 simple moving average for this product, clearly above the 50. So there's just still incentive to buy up to buy the dip on this product at the moment. Not seeing anything on the news that might cause us to reprice, and so coming into today, it puts us in a position where we have quite a bit to work with yesterday. Just a quick look at the actual profile. Here's yesterday's profile, just to get an idea. Quite a bit of structure that was incompletely auctioned left behind here. The singles at 2808.75, the singles at 2805. Remember 2809, 2805 is a key area. Those singles run all the way down to 96 from 85.50. So if we push above 96 in today's session, I'm looking for it to tangle 2800, and the next area up would be 2805. Now, I finished yesterday by spurting out all the levels up and down the range, right? Started from the top. I said 2880, 2375 above, 2821.50 above. This is just from memory. 28.14 is this recent swing high. 28.09 is a naked point of control in a reaction area. 28.05 is an important support resistance area. Then you have the 2800 century figure, 27.95, 95.50 as a key support resistance area. 27.90 is a key support resistance area. And then from there, 27.87 is the low from last Friday. And then you have 27.80 below that. And yesterday we pushed through all the way down into 27.67.50. We blew right through all those areas yesterday, and we're likely to test those structures on the way back up. So we could see there's quite a bit of repair or unfinished business, an extraordinary auction or imbalanced auction up again at 28.09 down to 28.07, 28.05 down to 27.96, and those are the areas that I'm monitoring. I know that's a lot of levels. You can always go back to this video and watch it once we're done here, or you can rewind. Right now, it's up to you, but those are the key areas, and you can see that the profile is very thin up top, and it started to balance out below, but we don't see more than 6 TPOs, 5 TPOs, really 5 TPO wide profile, a pretty clear indication of a trend day that has taken place here. So let's take a look at what we're expecting for today. If you want to, of course, continue this conversation, I'll be talking about this at convergenttrading.com in the chat room through audio updates and all that good stuff. I got to make sure that you know that that exists. Anyway, for today, the primary scenario, I'm expecting some selling to respond back to the 27.85. The normal course of action here is that we did have some short covering into the close yesterday. There was quite a bit of buying. I'm looking for it to be an open auction in range. I expect some chop on the open. It is Tuesday, which is probably, I think the last time I ran the stats is the day with the most volatility, most opportunity. But I expect this to at some point eventually make its way down to 27.85. I expect it to get tangled up over here and then hold for balance, come back up into the range, and potentially push the overnight high to hold in the middle. I expect today to be a resting day. I expect it to be a two-way battle. Yesterday's action was clearly dominated by sellers until it wasn't. And then the buyers came in, so you have the sellers being knocked back a little bit on their heels, a few punches into the close, but prices are high enough that it might intrigue sellers to step in again. So that's the primary. The secondary is a push back to 2800 to complete some of those repairs to 2805 or so. Looking forward to tangle with 2805. If it doesn't, it might push to 2809, and then I'm looking for sellers to step back in and bring it back towards 2800 to balance out in this area. 2800 is a noisy area, so I'm looking for it to just back and forth, back and forth. So does it push higher on the open or does it push lower? So again, if it pushes higher, I'm going to be looking to be active at 2805, 2809. If it pushes lower, I don't respond at 2800. That's just too noisy for me to trade the century figure. If it pushes down, then I'm looking to respond at 2785, well, 2790, 2785, 2787 or so. That's where I'm looking to respond and look for rotations. I'm expecting outside in trading to pay off today. If we do get an impulse, like we open and we push strong and then we have a weak pullback and then we continue to take out that high from the original impulse, if we do that, get that kind of action, then I'm going to trade from the inside out, meaning looking for a trend towards those areas that I mentioned. I'm not going to mention them again. So that's really the plan for today. Anyway, I've talked a long time. I did have some trader wisdom for today, but it doesn't look like I'm going to get to it again. today. The heat map is pretty noisy today. Looking at the heat map this morning, there's quite a bit of noise in here. There's just a lot of riff-raff going on in all three ES, NQ, RTY, ES, RTY, NQ. And so I'm going to be paying attention there. I'm not seeing positioning. This is a full depth. I'm not seeing any positioning except at 2805. You can see that 2805 starting with 2804 is getting kind of heavy. It's getting kind of heavy. So, and then ahead of the 2800, we see some size beginning to build. And remember, I mentioned 2790. There it is. There's the size at 2790. So keeping an eye on that to see how the market might respond once we get there. It's a long trader bite. Good luck today. Remember, risk comes first. Without risk control, you cannot be here tomorrow. And if you can't be here tomorrow, then you're gambling today. You're not running a business. Trading is a business. Good luck.